that's where you will see some action.
Okay, but Prakash, we will let you go on that note. Thanks a lot for joining us. Just keep an eye on the market because I think this is emanating from the U.S. futures. So intraday there is a sharp knock. I think we get delayed rate, so perhaps we won't be able to fully reflect it. But if you look at that, that's actually slipped quite a bit all of a sudden. And let me see if there's also a move on the dollar index because, okay, that hasn't moved much, but the Nifty clearly has 17,600 has been broken. Whether we reclaim that or not, we'll find out. Amit Gupta is joining us. He's Vice President and Fund Manager at ICICI Securities PMS. Amit, hi, good afternoon. Thanks a lot for joining us. And just going through your PMS list and the top picks that you have, I wanted your view on Bajaj Finance first because that's been a rank outperformer over the last couple of months. But it's always been expensive. But even then, do you think the near-term move has been just way too fast?
Yeah, so I think if you look at the overall AUM size actually of the company now, so it is likely to be double. This is what the management is targeting. It has already moved from 1.6 lakh crores to 2.04 lakh crores now over the span of 1 year. And last year it was not able to perform because they were not so aggressive because of the NPA structure which could have come. But now the asset quality is coming better. I have seen the NNPA is around 0.5%. They are coming out with their own credit cards now, and they are going perfectly digital now in all the products and services from, I think, December onwards. So these are all the kicks. Though the valuations has always remained high in the stock, I have seen the scenario when the valuation was almost 9 times forward earnings. Now at least it is somewhere around 8 times or 7.5. This is what we are targeting now going forward. So my sense is the larger NBFCs are likely to do better now when the interest rate cycle is catching up, and because the lower NBFCs, I think they will find somewhat, a problem in growing, and that is where the business will shift more towards the larger one who have a digital transformation. Second, if you look at the banking loan book, out of the overall loan book, 50% is coming from 3 segments. One is the home loan, second is SME, and the third is the NBFCs. So I think that also shows the kind of growth which can come up now in these larger NBFCs with the growth in the economy eventually. So that is why we are betting more actually on the stock now after the last long consolidation period.
Amit, any interest in these tier 2 names which are doing well, RBL, etc.?
So I think we need to give some time over there, but still I think the PSU banks can come up better, because if you observe what happened in the SBI results recently, so because of the yield move, we saw the MTM losses were there because they keep more held for availability. Not till the maturity. So I think that is a trigger now, because the bond yields mostly, I think the game is done. If you look at the inflation right now across the globe, it is peaking out. The commodities have declined. If you look at US, the wage inflation has come down from 4% to 3.5%. If you see the used car prices, they are tapering off. And that is where I think what is the expectation of 3.5% by December 2022. And now they are at 2.5. I don't think another 1% is going to be there in the next 4 months. That will comfort the market. And the market is looking at 2024 now, where there may be some decline of interest rates also, possibly could be so-called recessionary scenario. But we need to understand last 2 quarters, US GDP has almost remained negative. So things are happening very fast. In India, I think whatever the bond yields are there, it may be more range bound, but the sharp move we are not expecting, because it looks monsoon has a good impact on lowering the inflation now, at least the vegetable prices and all.
All right. Hi, Amit. What about FMEG stocks? Second half of this year will have that festive demand. You'll also have hopefully lower commodity cost. Do you believe the best is yet to come? If yes, any stocks you'll have exposure to?
So I tell you very interesting fact from the RBI. Actually, RBI does 2 kind of surveys. One is the consumer confidence survey, and the other is the industrial outlook survey. So consumer confidence survey, if you see pre-pandemic, it was 100, it declined to 50, and now it is 76. That means the consumer confidence, when we look at the pre-pandemic, it is still lower, but the industrial outlook is very robust. In fact, in 2021 only, it moved beyond 100, and now it is 110. So that is where I think that is the big boost now for this consumer confidence moving into the festival season. That is where I think you can see, some kind of spending. If you look at the PMI services now across the economies, it is above 55. We talk about lockdowns in China, it is above 55 there. We talk about, some kind of recessionary talk in US, it is above 55 there. In India, it is already 55, 56. So my sense is that particular people moving out, that will lead to some kind of spending more and which will help in revival of the economies. So
Okay.
this is where consumer discretionary, I think
Yes.
that is definitely one of the key.
Okay,
that we can look at.
Amit, just hold on to that thought, because the market is something which now warrants our attention. Now, it looks like a combination of expiry and also the fact that there's this move happening in the US futures. Now, I spoke about the fact that 17,600 put had the highest open interest, and immediately the market once bounced from there. But the second time when it broke, just almost like a bit of a free fall. Now, very interesting. There it is, 17,600 put. So that's for the day, of course. Today being expiry, so you're seeing quite a bit of move. 17,550. In fact, the market almost went to 17,500 and now has bounced back as well a bit. The bank nifty is still doing well. So let's see. Amit, purely since you track the market in terms of the positioning as well, what's been your view? Because we've seen the market had sort of moved in one direction, and the positioning also had moved in one direction. Have the excesses been taken out of the market?
So I think it's, market is moving between inflation and recession very clearly. And once it has seen both the things now, I think the volatility we need to look at. So that's suggesting that markets will be more range bound now, because 18-19% of volatility suggests me that if it has been 24-28%, we need to be little, sideline. And it is also not 14%. So I think if you look at from the option writer's perspective, 18-19% is very lucrative to start writing actually the OTM options now. And I think this is where the markets have also stuck up in a range. And because the crude also is, supportive, US elections are there in the month of November. I think another 2-3 months, you may have, possibly range bound crude prices, which can lead to the range bound equity markets also, particularly the emerging markets. That is what I believe.
Anuj, US futures are still high.